Hey, hi all. Today we will be looking at different kinds of debt funds so that we can park our emergency fund in safer assets, giving us better yield than FDs, yet at a very low risk, so that in case of an emergency we can utilize this easily. So log on to niveshmultiplier.com and let's start doing our market research. So I'll start with typing what are the different type of debt funds. The AI will now tell me that there are different kinds of debt fund like dynamic bond funds. These are investing into diversified portfolios. Second is the government securities. Third is the corporate bond funds. Fourth is the short duration funds. Fifth is liquid funds, and sixth is government banking and PSU funds. It will also give me a overall analysis of different kind of funds with their expense ratio, 1 year and 3 year return. Here we can see that most of them are giving 1 year return for around 7% and 3 year returns of around 7.5%. We can see the good ones with the lowest ratio is the Franklin India Banking and PSU debt fund, which has a very low expense ratio. Now we'll check the performance ratios Alpha, Sharpe, and Sortino. And for the one that we selected, the Franklin one, we see all of the three ratios are in the optimized range, which means that this fund looks good in terms of returns as well as in term of performance ratio, risk adjusted ratio. Now we would want to look at the sector exposure so that we know that this fund is a well diversified fund and not the one which is investing into one particular sector, hence increasing my risk. So when I scroll to fund 9, I see that it is heavily invested towards finance, but still diversified across different sectors with 37% into finance, which looks good.